Auditing refers to examination of the financial statement of the company. As a result, the conduct to provide investors and stakeholders in confidence that the company financial reports are accurate. And auditing also provides regulator with the assurance of the company as adhering the appropriate legal and regulation of the standard. Now, it's easy to think that audit is a financial investigations where a company financial statement are sanctioned by external or internal auditor to ensure an accurate and free of errors. After an audit, the auditors shall be provide an opinions or whether the financial statement accurately reflect the financial positions of the company. As a summary, an audit examination of financial statement of the company, such as income statement, cash flow statements, and balance sheets. And also, an audit provides investors and regulators with confidence in the accuracy of corporations' financial reporting. And also, once completed, the auditor will provide an opinion on whether the financial statement accurately reflect the financial position of the corporations. Now, how the auditing works, no? Although there are many types of audits with the context of corporate finance, an audit typically refers to the conduct of the public or private corporations, especially the government agencies such as Security and Exchange Commission or SEC that requires publicly listed companies to conduct an independent audit to validate their annual financial reporting. The audit provides stakeholders and regulatory agencies with information on how the money is earned and spent throughout the fiscal years. Depending on the size of the company, an audit can span a few months or the entire year. At the end of the engagement, the auditor provides professions opinions on the accuracy of the financial reporting sundown. There are two types of audit, the internal and external audit. Internal audits are performed by employees with the companies. So the audit stands the cost and financial statements and greater emphasis of phase of companies' operations and corporate governance. And internal audit reports are not available to the public but provides to the company's executive and audit committee to provide an overview of organization's performance across different areas. No? External audits involves independent auditors hired to express an opinion on the accuracy of corporation financial reporting. For public companies, the result of an external audits are reported to the public and are conducted following the generally accepted audit standard or GAAS. Now, as a stage of an audit, first is the planning, internal controls, testing, and reporting. And now let's go to a code of ethics. A code of ethics based on a mission of International Federation of Accountants or IFAC or as set out in its constitutions. It to serve the public interest of IFC will continue to strengthen the worldwide accountancy professions and contribute to the development of strong international economies by establishing and promoting adherence to high-quality professional standard, furthering the international governance convergence of such standard of in speaking out of the public interest, issues where the professions and expertise is most relevant. In pursuing the missions, the IFCS Board has established the Ethics Standard Board of Accountants to develop the issues under the own authority, high quality of the ethical standard and other pronouncement for professional accountant for the use around the world. The Code of Ethics for Professional Accountant establishes the ethical requirements for professional accountant. A member body of IFCS of firm may apply less stringent standard that those state the Code of Ethics. However, if a member body or firm is prohibited from complying with a certain part of the code by the law or regulations, they should comply with all other parts of the code. Some jurisdictions may have requirements and guidance with the differs from the code. Professional accountant should be aware of those differences and comply with the more stringent requirements and guidance unless prohibited by the law and regulations. Now, The introduction of financial fundamental principle. A distinguished mark of the accountancy profession is an acceptance of the responsibility to act in the public interest. Therefore, as a professional accountant, the responsibility is not exclusively to satisfy the needs of the individual, client, or employer. In acting in the public interest, a professional accountant should observe and comply with the ethical requirements of this code. No? The code in the three parts of establish the fundamental principles of professional ethics for professional accountant provides conceptual frameworks for applying those principles. The conceptual frameworks provide guidance on the fundamental ethical principles. Professional accountants are required to apply the conceptual framework to identify the threats to compliance with the fundamental principles, to evaluate their significant, and if such threats and other than clearly is significant, to apply safeguard to eliminate them or reduce them to an acceptable level such that the compliance with the fundamental principle is not compromised. And also to illustrate how the conceptual framework is to be applied in specific situations. It provides an example of safeguard that may be appropriate to address threats to compliance with the fundamental principles, and also provide example of situations where safeguards are not available to address threats compliance with the fundamental principle, and also provide example of situations where safeguards are not available to address the threats, and consequently the activity or relationship creating the threats should be avoided. It applies to personal accountant in public practices, and also it applies professional accountant in business. A professional accountant in public practices may find guidance irrelevant to their particular circumstances. As a professional accountant is required to comply with the following fundamental principles. First is integrity. The integrity is the professional accountant should be straightforward and honest in a professional's business relationship. Second is objectivity. As a professional accountant should not allow bias, conflict of interest, or undue influence, or other that override professional or business judgment. Third, professional competence and due care. As a professional accountant has a continuing duty to maintain professional knowledge and skill at the level required to ensure the client employer receive the competent professional service based on the current development and practice legislations and techniques. As a professional accountant should act diligently in accordance with acceptable technical and professional standard when providing a professional service. Fourth one, confidentially. As a professional accountant should respect the confidentiality of the information acquired. As a result, the professional and business relationship should not disclose such information to the third parties without proper and specific authority, unless there is a legal or professional rights and duty to disclose. Confidential information is required as a result of professional and business relationship. Should not be used for personal advantage of the personal accountant of third parties. The last one is professional behavior. As a personal accountant should comply with relevant laws and regulations, should not avoid any action with discredit the professional. It's this and should avoid any actions of discredit the professions. Now, as a in conceptual frameworks approach, the circumstances in which professions accountants operate may give rise to specific threats compliance with the fundamental principle. It is impossible to define every situation that creates such threats and specify the appropriateness mitigation actions. In addition, the nature of engagement, the work assignment, may differ, and consequently, the different threats may exist, requiring the applications of different safeguards. The conceptual frameworks that requires professional accountant to identify, evaluate, address threats to compliance with the fundamental principles rather. than merely comply with the specific rules, which may be arbitrary, is therefore in the public interest. This code provides frameworks to assist a professional accountant to identify, evaluate, and respond to threats to compliance with the fundamental principle. If identified threats are other than clearly insignificant, the professional accountant should, where appropriate, apply safeguard to eliminate the threats or reduce them to acceptable level, such as compliance with the fundamental principle. Now, let's go to the threats and safeguard. And threat and safeguard compliance with the fundamental principles may potentially be threatened by the broad range of circumstances. May threats fall into the following categories. Now, first is self-interest traits, which may occur as a result of financial or other interests, or a professional accountant or an intimidate or close family members. Self-review threats, which may occur with a previous judgment, needs to be reevaluated by the professional accountant responsible for that judgment. First, advocacy threats, which may occur with a professional accountant promotes a position or opinion to the point that subsequent objectivity may be compromised. Familiarity threats, which may occur when, because of the close relationship, professional accountant becomes too sympathetic to the interests of others. And last one, intimidation threats, which may occur when a professional accountant may be deterred from acting objectivity by threats or actual perceived actions. Unethical conflict resolutions rather, and evaluating compliance with the fundamental principles of professional accountant may be required to resolve a conflict in the applications of the fundamental principles. First one is relevant facts, ethical issue involved, fundamental principles related to the matters or questions, and establish internal procedures and alternative course of actions. Now let's go to integrity, professional competence, and due care. Now, to conflict of interest, as a professional accountant in public practices should take responsible or reasonable step to identify the circumstances that could pose or conflict of interest. Such circumstances may give rise to threats to compliance with a fundamental principle. For example, a threat to objectivity may be created when a professional accountant in public practices competes directly with the clients or has a joint venture or similar arrangement with a major competitors of a client. A threat of objectivity or confidentiality may also be created when a professional accountant in public practices performs service for a client whose interests are in conflict, or a client or a dispute with each other in relations to the matter or transactions in the questions. A professional accountant in public practices should evaluate the significance of any threats. Evaluation includes considering, before accepting or continuing a client relationship or specific engagement, whether the professional accountant in public practices has any business interest or relationship with a client or third party that could give rise to threats. If the threats are other than clearly significant, safeguards should be considered and applied as necessary to eliminate them or reduce them to an acceptable level. And also, depending upon the circumstances giving rise to the conflict, safeguards should ordinarily include the professional accountant in public practices. First, notifying the client of firm business interests or activities that may represent a conflict of interest, and obtaining their consent to acts in such circumstances, or notifying all known relevant parties that a professional accountant on public practices is acting for two or more parties in respect of a matter where their respective interests are in conflict, or obtaining their consent to act where the conflict of interest poses or threats one or more of the fundamental principle, including objectivity, confidentiality, or professional behavior. They cannot be eliminated or reduced to an acceptable level through the application of safeguard. A professional accountant in public practices should conclude that is not appropriate to accept a specific engagement or there's resignations from one or more conflicting engagement is required. When a professional accountant is public practices as request consent from the client to act or another party which may or not be an accepting client in respect of a matter where the respective interests are in conflict and the consent has been refused by the client, then the professional accountant in public practices must not continue to act on one of parties in the matter giving rise to the conflict of interest. No? Second opinion is it is a situation of professional accountant in public practices is asked to provide a second opinion on the application of accounting, auditing, reporting, or other standard or principle to specific circumstances or transactions by or on behalf of the company or the entity that is not existing client may give rise to the threat's compliance with the fundamental principle. For example, there may be a threat to the professional accountant or professional professional competence and due care in circumstances where the second opinion is not based on the same set of facts that were being made available to the existing of accountant, or it's based on inadequate evidence. The significance of the threats will depend on the circumstances or the requests and all the others available facts and assumptions relevant to the expression of professional judgment. The last one is fees and other types of remuneration. When entering into negotiations regarding the professional service, a professional accountant in public practices may quote whether a fee deemed to be appropriate. The fact that one professional accountant in public practices may quote a fee lower than another is not in itself unethical. Nevertheless, may have the threats to compliance with a fundamental principle arising from the level of fees quoted. For example, a self-interest threat to professional accountant or competence, a due care is created if the fee quoted is low that is may be difficult to perform the engagement in accordance with the applicable technical and professional standard for that price. No? Contingent fee is widely used for certain types of non-assurance engagement. They may, however, give rise to threats to compliance with the fundamental principle to the certain circumstances. They may give rise to self-interest threats to objectivity. The significance of such threats will depend on factors including the nature of engagement, the range of possible fee amount, the basis of determining the fee, whether the outcome or result of the transaction is to review by the independent of the third party. And marketing professional service. In terms of marketing professional service, when the professional accountant in public practices solicits new work through advertising or other form of marketing, there may be potential threats to compliance with the fundamental principle. For example, a self-interest threat to compliance with the principle of her professional behavior is created if service achievement product or market in the way that is inconsistent with that principle. A professional accountant in public practice should not bring the profession into disrepute and the marketing profession service. The professional accountant in public practices should be honest and truthful, should not make exaggerated claim for service offered, qualifications possessed, experience gained, or make disparaging reference on a substantive comparison to the work of another. Next is gift and hospitality. As a personal accountant in public practices or in immediate or close family members may be offered gift and hospitality from the client. Such an offer ordinarily gives rise to a threat and compliance with the fundamental principle. For example, self-interest threats to objectivity may be created a gift from the client is accepted. Intimidation threats to objectivity may result from the possibility of such offer being made public. The significance of such threat will depend on the natures available and intent behind the offer. Where the gift or hospitality with a reasonable and informed the third party having the knowledge of all relevant information would consider clearly insignificant or made a personal accountant in public practices may conclude that our offer is made in the normal course of the business without the specific intent to influence decisions making or to obtain information in such cases. The professional accountant in public practices may generally conclude that there is no significant threat in compliance with the fundamental principle.